Hi everyone, this is Mrs. V Chan. Welcome to my Form 4 Accounting lesson number 10, and today is 21st March 2020. Okay, so we will do some exercise on chapter 4, which is bad debts and allowance for doubtful debts. Okay, so here we have the question. So we are given trial balance and also some additional information. So what we need to do in this question is to draw up income statements and also the statement of financial position. So therefore, I have my income statements. We always start with a nice heading. This is the owner, J. Lu. All right, and then I have put some key answers here. This is net sales. All right, this is gross profits, and this is total revenue and total expenses, and we will have net profit here. So which is 547,400. So this net profit will be also in the statements of financial position. So I have net profit here. Okay, and some other key answers as well. So this is total non-current assets. So this is total current assets. So altogether we have total assets. And finally, so this is the second half of the statement of financial position. Okay, later on, let's see whether we can make them the same on debit side and credit side. Okay, so in the trial balance here, we already have bad debts, which is 18,000. So that means the accounts receivable, this much is already after deducting bad debts written off. However, if you look at this point number 4, okay, so we have a debt which is 6,000 was to be written off as bad. That means not only 18,000, we need to write off another 6,000. All right, so what is the double entry for bad debt written off? Remember that? So we debit bad debts. Okay, and who will pay us no money? So which is here, use the name, which is accounts receivable. Okay, so that I have to put 6,000 here, 6,000 here. So therefore, after the adjustment in point number 4, so how much will be total bad debts here? So total bad debts will be at another 6,000. Okay, and then we need to minus 6,000 from accounts receivable. Okay, so therefore in the income statements, I have altogether 24,000 bad debts written off. However, in the statement of financial position, here I have accounts receivable. We need only minus 6,000 because this 136 already including 18,000 that that's written off. So this is my accounts receivable figure after adjustments of point number 4. Okay, now we come to allowance for doubtful debts account in the trial balance. So this is always a credit item. So you can see we have this 8,000 on credit side. Okay, and now here is my workings to explain to you. So remember, this is the real accounts, and then we start with this opening balance 8,000. All right, so this is step number 1. Right, remember what is step number 2? Okay, we have the closing balance. So this is step number 2. We have this balance carry down. All right, so now the information in point number 5 saying what is the percentage estimation on accounts receivable, which is 4%. So therefore, I need to go to my, so here is the statement of financial position. This is account receivable, and then we estimated that 4% on this much may not be collectible. So how much is that in that case? 130,000 times 0.4. So therefore, I have 5,200. Okay, so what is this 5,200? Will be the closing balance. So I have 5,200. Okay, so this is closing. Closing is 5,200, which is smaller than opening. So therefore, we have decrease in allowance for doubtful debts. It means what? The closing is smaller than the opening. We need to change from 8,000 to 5,200. So if we have less allowance, that will be a good thing. So for the good thing, we credit profit and loss account. And now we need to decrease allowance by debiting allowance for doubtful debts by the change. So how much is the change? Okay, so I have 8,000 minus 5,200. Okay, so that would be 2,800 here, 2,800. Okay, so I go to my credit, I go to credit profit and loss, I go to my income statement. Here, the good thing, after gross profit, so I have this 2,800. Okay, add, what is the description? Decrease in allowance for doubtful debts, right? Okay, and also debit allowance for doubtful debt. So here I insert 2,800. So this is step number 3 because of profit and loss. And then you check. After that, we also have 8,000 and 8,000 on both the credit side and debit side, right? Alright, so therefore decrease in allowance for doubtful debt will be a good thing. So we add to this decrease to gross profit, and decrease means what? The closing is smaller than the opening, and this is the opening, and then minus all the adjustments here, the step for closing one. So sometimes you can skip the T account to save you time. You can just simply work out the step here in this way to work out the change. All right, so this is the opening balance, and the whole thing here is the closing balance for allowance for doubtful debts. Okay, so next I go back to point number 1, and here we have inventory, and the date here is the closing, so therefore this is closing inventory. All right, so what about the inventory in the trial balance? It is a kind of opening inventory. So this 103,000 in the income statement here, I have closing inventory 103,000, and this closing means not yet sold to the customer, so therefore it will be also the closing inventory as a kind of current asset. So I put 103,000. All right. Okay, so point number 2, we have accrued expenses. So remember, accrued expenses means expenses we are not paying enough. So therefore, we still owe ages 9,000. And then where if you go back and check the related item for wages, so here we have salaries and wages. That means we only pay 680, which is not enough. And therefore, in the income statements, here I have salary and wages. This is the amount paid. However, we are paying not enough, so we need to add another 9,000. So we have 689 as expenses incurred. And income statements should be always accrual based instead of cash based. And what do you think about this 9,000? 9,000 is a kind of current liability as accrued wages and salary. So here you go to current liabilities. We have this accrued wages, and then we owe people 9,000. Okay, so similarly, we're also not paying enough for electricity. All right, so because we have these accrued expenses. But however, if you check the description in the trial balance, you don't find electricity, and actually which item include electricity, this will be utilities. So that means this one, including electricity, 65,500 is also accrued. That means we are not paying enough. Okay, we need to add another 7,400. So therefore, I have my utilities in the income statement, add another 7,400. So 729 will be account of utilities incurred. All right, so we owe people 7,400 as I have my accrued utilities 7,400, which is a kind of current liabilities. Okay, so point number 3, we have this. The monthly rent was 40,000, and then here had been paid in advance. That means the amount we pay rent and rates is 560,000, which is paying too much. Therefore, we have to minus the prepaid rent and rates. And how much is that? So here is the diagram and timeline. So the timeline is up to the end of financial year, so which is 31st of March, and then paying too much in the month of April and May. Therefore, we have to minus 2 months here in April and May for the expenses incurred for rent and rate. So therefore, it would be 560,000 minus 80,000. So rent and rate incurred in the income statement should be 480,000. So here, this is my income statement. So rent and rates incurred should be 480,000. Okay, why we minus? Because we are paying too much. All right, so to be incurred in the next period. So therefore, this will be current assets. So where's my current assets? Here in the statement of financial position. All right, so here we have prepaid rent and rates. We pay too much for 80,000. And also, I need to adjust the position for inventory. So inventory should be matched, okay, in this column. All right, okay. So in this column, we only have accounts receivable, and then minus 5,200 for allowance for doubtful debts. And this figure 124,800 will be net trade receivable or net accounts receivable. Okay, so therefore you can see we have gone through all the adjustment here. Okay, so what about for the remaining thing? You just post this. This is for purchases, go to the income statement, and sales, go to the income statements, right? All right, and post all this and identify, for example, this is discount allowed. All right, so this is discount received, like that. Okay, and then you just complete the remaining income statements. Okay, I have key answers here for you. All right, and also you just complete the remaining statement of financial position to see whether you agree with the total assets and total capital and liability. Let me show description here as well. So this is total capital and liabilities. Okay, so that's all about today's exercise. So thank you for watching my video. I'll see you next time. Bye bye.